Hey everyone, welcome back to our channel. Today we're diving into Goldman Sachs' latest precious metals report and what it means for gold prices through the end of 2025. Goldman Sachs has raised its forecast to $3,100 per troy ounce, a key signal that the golden allure of safe haven assets is stronger than ever. If you're curious about what's driving this outlook and how it could impact your investments, you're in the right place. Let's break it down. So, first up, Goldman Sachs now forecast gold at $3,100 per ounce by the end of 2025, up from a previous target of $2,890. Now you might wonder, why the increase? It's a mix of robust central bank demand, expected ETF inflows as the Federal Reserve begins to ease its policy, and the persistent speculative positioning fueled by ongoing global uncertainty. In Goldman's view, even if investor positioning normalizes a bit, the fundamentals remain strong enough to support the new target, and if uncertainty continues, we could even see prices push higher toward $3,300. Let's talk central banks, the real game changers in this story. Goldman has increased its assumption for central bank gold buying from 41 tons a month to 50 tons. That's significant. Central banks worldwide, especially in China, are actively accumulating gold as a safeguard against economic turbulence and as a hedge away from traditional dollar assets. And here's the kicker. If these buyers ramp up their pace to 70 tons a month, Goldman's model indicates that gold could climb to around $3,200 per ounce. So, the commitment from central banks is a huge pillar supporting this bullish forecast. Next, let's dive into investor sentiment. When uncertainty hits, whether due to trade tensions, geopolitical issues, or economic shocks, investors flock to gold. This is clearly reflected in gold ETFs and futures market positions. As the Fed hints at potential rate cuts, we can expect a boost in ETF inflows. Lower rates make holding non-yielding assets like gold more attractive, and that adds upward pressure on the price. However, in times of high uncertainty, speculative investors tend to pile into gold even more aggressively, potentially driving prices up to $3,300. It's this mix of fundamental demand and speculative fervor that makes gold such a compelling asset right now. All these factors tie back to the broader macroeconomic environment. Goldman's bullish call on gold rests on two key pillars: monetary policy and fiscal concerns. On the monetary side, the expectation is that the Fed will eventually ease its policy, leading to lower real interest rates. This makes gold, a non-yielding asset, more attractive compared to bonds. On the fiscal side, worries over US debt and fiscal mismanagement could add an extra premium to gold's safe haven appeal. In fact, Goldman suggests that heightened fiscal concerns might push gold's price even further, potentially adding an extra 5% to the base forecast. Essentially, when governments struggle with fiscal discipline, investors turn to gold to protect their wealth. So, what does this mean for you? For investors, gold remains a strategic asset, a proven hedge against uncertainty, inflation, and fiscal missteps. Keeping an eye on central bank actions, Fed policy signals, and overall market sentiment is crucial. Gold isn't just a commodity, it's a barometer for economic stress and a buffer against financial volatility. For policymakers, the rising gold price is more than a market statistic. It's a clear signal of deeper economic concerns. Aggressive central bank buying and increased investor demand reflect a lack of confidence in current monetary and fiscal policies. This should be a wake-up call to address the underlying issues, whether it's fiscal discipline or policy transparency. To wrap it up, Goldman Sachs' revised gold target of $3,100 per ounce by the end of 2025 is a reflection of the structural shifts in global finance. From central bank demand to evolving macroeconomic trends, every piece of the puzzle points to gold's enduring appeal as a safe haven in uncertain times. If you found this analysis helpful, please like, subscribe, and drop your thoughts in the comments below. Thanks for watching, and see you in the next video.